rise of India. So I'm going to uh, start at a high level, tell you about myself and how I got involved with emerging markets. I'll tell you what I think are the main things to know about emerging markets, and then I'll tell you about what I think is one of the greatest growth stories happening on the planet right now. So I live in San Francisco. I've lived here my whole life. My business is called EMQQ Global, and we invest in the internet companies, the FANG stocks, if you will, of places like China, India, Brazil, Southeast Asia, etc. And when I uh, describe these things, EMQQ is the name of our primary index that tracks all of the internet companies in all of the emerging and frontier markets. FMQQ is the same thing without China. And finally, INQQ is just the Indian internet. So if I use those as shorthand, you'll know the geographies I'm referencing. In terms of myself, as I mentioned, I live in San Francisco. I've lived here my whole life. I got an economics degree from the University of Arizona in December of 1991. I came back to San Francisco. I had one interview with a company called Robertson Stephens and Company, which was the leading technology-focused investment bank in San Francisco back in the 80s and 90s. And the interview was 20 minutes long. We talked about college basketball for 19 minutes, and then the guy said, "You can start Monday." And I said, "How can I start Monday? I don't know anything about investing." And they said, "Go buy this book." And they wrote down A Random Walk Down Wall Street. Now, some of you probably uh, have heard of this book, and maybe even some of you have read it. This book is, part of the foundation of the world of indexing and efficient markets. It was first written actually in 1973, 52 years ago, by this man, Burt Malkiel, who's a longtime Princeton economist. And so I picked up the book and read it over the weekend. The reason the book is most famous is because in 1973, when it was first written, there was no such thing as an index fund. But in three simple paragraphs, Burt Malkiel laid out his idea for a new investment product called an index fund. So this book and this man are part of the foundation of indexing. And Burt Malkiel also oversaw the launch of the first ETF, the Spider. So I started by reading about indexing, but when it comes to investing, when it comes to business, when I look at the world, I look through an Omaha lens and try to think about everything in a Charlie Munger kind of way. But for the last 25 years, excuse me, for the last 25 years, I've been business partners with this man, the one of the founders of indexing. And so I see, both sides of the investment aisle, if you will. The first thing we did together was develop an idea I had. In 1999, I started an online brokerage firm called eInvesting, which introduced fractional share trading to the world. You could buy stocks in dollar amounts instead of share amounts. I asked Burton to be an advisor. We sold the company to E-Trade in the year 2000. Then we started this other thing that's become mainstream here in the United States called direct indexing, where you put together your own separate account where you own, say, 50 or 100 stocks that are from the S&P, and you do that with the goal of tracking the index, but also for taxable investors, creating tax losses which have value so that you could, in fact, beat the index on an after-tax basis. Now, this is also mainstream in the United States now. You can do all these things at even Schwab and Vanguard now. But the way I got into emerging markets was in 2004, right before we sold active index advisors to Natixis. Google went public and they asked my partner Burt to give a talk to the employees about investing. Now, I wasn't invited, but a few months after this talk, my phone rang and it was a person from Google, and he said that he wanted to invest and make his own custom S&P 500 strategy. And So I told him we didn't work with individuals, but he told me he didn't want an advisor and he had a lot of money. And I agreed to help him set up an account and manage his portfolio. And then he started introducing me to other people at Google. So 20 years ago, this month, I probably went to Google, 2 or 3 times as I did all through the spring of that year. But when I was going back and forth to Mountain View, Burton started going to China. Two of his Princeton economist friends were Chinese professors. They had left Princeton to teach in Beijing, and they went back to teach there. And they started to tell Burton that he needed to come visit China because China was, as some of you may remember, in 2005, 2004, China was growing at over 10%, its GDP. And so Burton goes to China. Him and his two friends write a book about investing in China. Google calls me and said, "Can Burton come talk about China?" I said, "Sure." And little did I know that when I picked up Burton that day and drove to Mountain View, that my life would change because as soon as he was done talking, all these Google people looked at me and said, "We want to invest in China." So I didn't plan it, but that's my background. So for the last 20 years, I've been focused on emerging markets. And so let me start at the high level. Emerging markets as an asset class haven't really done a lot for investors the last decade. People have, started to question whether they should even allocate to emerging markets. But let me go back and just review the case for emerging markets. Why should people invest in emerging markets in the first place? And the list is pretty simple. Emerging markets have a lot of people, better demographics, faster growth, and that is driving consumption. And all of these things are true. They were true 20 years ago. They'll be true, today and in the next 20 years as well. 85% of the world's population in emerging markets. Younger population, so more like 90% of the future is in emerging markets. Their economies are not only faster growing, they're now larger than the developed world economy, certainly on a purchasing power basis. And the bottom line of that is the all of this growth is driving consumption. The thing that's actually emerging are 6.5 billion people that want all of the things we take for granted. They want more and better food, better clothing, heaters, air conditioners, and other appliances. They want to be entertained. They want to go to a movie. They want to get on an airplane for the first time and take a vacation. They want a motorized vehicle and they want their kids to go to college. And that's the story. I didn't have to figure this out. It was well documented 20 years ago. And you can see McKinsey calls it the biggest growth opportunity in the history of capitalism. So this is what I've been focused on pretty much from day one. It is the foundation of everything that we do here at my business. So we'll talk more about this. Now, here's the problem with emerging markets. And this is something I learned in the first 5 minutes 20 years ago. So after Burton's talk in Mountain View, we drove back to San Francisco. And the first thing I did was walk over to our portfolio managers and ask for a list of all of the companies in the China ETF, because I assumed for these Google people that wanted some China exposure, we would just use an ETF. But there was only one China ETF in the world that day from iShares, the FXI, the ticker, the FTSE Xinhua Index. And I wanted to go through and see what was in it because I'm an Omaha person and I don't care what the name of a fund is. I want to see what are the businesses we're going to be investing in. And so I asked for the list. And that's when Burton explained to me that most of the companies were going to be state-owned enterprises, government-owned banks and oil companies that didn't really care about growing their earnings. And that made me sort of ill because in Omaha, investing is really simple. The reason companies have value is because they make profits for the owners. And the only way to grow the value is to grow the profits. And state-owned enterprises don't really care about that. Now, the China index was 80% state-owned enterprises. The broad emerging market indexes aren't as bad, but it's about a third. And so it's no wonder nobody's made any money in emerging markets because they haven't grown. They have not grown their revenue. And most importantly, they haven't grown their profits. So emerging markets, as defined by the MSCI, I think are the biggest value trap in the world. So what I learned pretty early in my 20 years focused on EM is that if you really want to participate in the growth, you have to get more targeted. You have to leave the legacy economy, the government economy, the corruption, the oil, etc. You want to leave it behind and get more targeted. And if you were an endowment like Harvard or Yale, you could do a lot of different things. You could start your own private equity fund, for example, like David Swensen did at Yale, but most people couldn't do that. So when people would ask me, what's the best emerging markets ETF? What's the best way to invest in emerging markets? I told them to just buy the consumer stocks, leave out the corruption, and just buy the food companies, the clothing companies, the companies that are going to really participate in this wave of new consumers. And that's what I told people when they asked me. Now, I had launched a number of China ETFs with Guggenheim in that first 10 years. But when people asked me, I told them what I thought was the best way to invest. And it wasn't a product I had anything to do with, but I knew about it and it owned the 30 largest emerging market consumer stocks. Now, about 11 years ago, someone called me and asked me what was the best emerging markets ETF for a long-term investor. And I answered that call on my iPhone, my very first iPhone. And as I began to tell them to buy the emerging market consumer stocks, I had a light bulb moment and I went back to my desk and I launched this company 100 days later with the launch of EMQQ on the New York Stock Exchange. So I didn't quite appreciate what was going on as clearly as I do now. But what happened the day that I got that call, I was looking at the stocks that I owned, which were five. I had five stocks, all of which were they were all emerging market consumer companies, but two of them were not called consumer companies. Two of them were called technology companies. And so I could see that in particular, the Amazon.com of Brazil, Mercado Libre, was growing at 120%, while the Walmart of Mexico was growing at 8 or 10%. So I could see this growth going on in these new tech companies, but I didn't really appreciate the full story. So what is happening right now on the planet is a combination of three megatrends at the same time. And they're big, they're one directional, and we're part of all of these. But because we've been part of them for a long time now, we don't think about them as being trends at all. What are these three megatrends? We already covered the first one. When I was a kid, we had vacations and cars. My brothers and I got to go to college, as have my kids. So we've been consumers for a long time. We don't think about that anymore as a trend. Well, most of the world is just getting enough extra money to buy food, buy better clothing, appliances, etc. So that's the first megatrend. Now, as I said, I got that call 11 years ago and answered it on my iPhone. So I had an iPhone, but it was pretty new. But I had a computer for 20 years before that. Well, guess what? Most of the world's getting their first computer today. It's not a desktop. It's not an Apple product. It's an Android-based smartphone that's getting better and more affordable every year. And they're also getting the internet for the first time. I got the internet in 1995 on a telephone line with a modem. It's obviously gotten easier to get the internet, and the internet's a lot better, but most of the world never got wired at all. So you're giving 6.5 billion people their first computer and their first internet access And the result is this: massive growth. Yes, emerging markets have been a bad place to invest. The emerging markets index from MSCI hasn't had any growth. The emerging markets internet sector, as defined by EMQQ, has had massive growth. Now, most of this has been about China. I'm sure all of you know about Alibaba and Tencent and these giant internet companies from China. Well, they've been most of the story. Here's the same revenue, but this time I have China in gold and the other emerging markets, the other 45 emerging markets, in purple. So 80% of this story so far has been about China. But this is a 30-year story. And so, yes, China was the beginning of this, but that purple area is way bigger than China. It's 4 times as big. And while China's e-commerce on the left, again, the most developed in the world, the rest of these emerging markets are really just getting started. So 4 times as many people, and they're in the beginning of this as well. So the next 20 years, you're going to see explosive growth in the third wave, which is what we call the emerging markets other than China. So think about the way the internet has swept the planet. Started in the developed world, countries like Sweden and the United States, around the year 2000. And people first had personal computers at their homes. They had internet access and they could go on the internet and do some kind of business, buy a book or sell a used bike. That was people like me and probably you. And what happened? The FANG stocks, as we call them, took over our lives and our stock market, first on PCs, then on smartphones. The second wave was China right behind us. You saw what that looked like. And now the third wave is here. Now the third wave has been, coming in for a little while now. I mentioned Mercado Libre, the Latin American leader in e-commerce. And let me just mention 2 other things about Mercado Libre, because they're pretty important parts of this whole story. This is now the largest company in Latin America, has the largest market cap, been by far the best performing stock in the last 15 years. It's not in the MSCI index. The single best performing company, the largest, the dominant internet company in every country from Brazil to Mexico, is not included in the index. The index includes the corrupt state oil giant, not just once, but twice. The first and second largest position in the MSCI from Latin America are state-owned corrupt companies. Meanwhile, the most entrepreneurial company isn't included. Now, why? I'm not sure. I'm not in charge of the MSCI. It's either because of the stock exchange they're listed on, which is the NASDAQ, or it might be where their corporate office is, which is Uruguay. The revenue, however, is from Brazil and Mexico and all of the other countries in Latin America. And the other thing I would point out, corporate governance is your biggest problem in emerging markets. Almost all of these internet companies have the same story. The smartest kids from every country go to great colleges, Harvard, Stanford, IIT Delhi, Oxford, you name it. And then they go to work for a US company, a McKinsey or a Morgan Stanley or a Microsoft. Then they get their MBAs at Harvard or Stanford, and then they start an internet company and get funded by US institutions. Now, that doesn't guarantee better corporate governance, but if funds like Sequoia are setting up the company's paperwork, it's a pretty good head start versus things like Petrobras. So, Nubank, this is the second largest Latin American company. Again, the founders, you can see where they went to school. They were funded by the founders of Mercado Libre and also by Berkshire Hathaway, the last investor before the IPO. Southeast Asia, Sea Limited, this company's headquartered in Singapore, trades on the New York Stock Exchange. The revenue comes from all over the place. The database doesn't see that. It's also missing from the indexes. Korea's leader, Coupang, same thing, Harvard, New York Stock Exchange. So you get the idea. Even Kazakhstan has a publicly traded super app that's incredibly profitable. KSPI Kospi. Check out the income statement. All right, now let's get to India. So, like a lot of people, we here at EMQQ have been waiting for India. When I launched this business 11 years ago, we had 65% weighting in China, the companies that we talked about, Alibaba, etc. We had companies like Mercado Libre, but we didn't have nearly any Indian exposure. On the first day we launched, we had one single stock from India. Now, we had another one go public, but you can see for the first 7 or 8 years, we only had two Indian internet companies, and they were small versus Alibaba and Tencent. So India was only about 1%. But finally, in 2020 and 2021, India's internet companies started to go public. There was also a bubble that burst in November of 2021. But nonetheless, the number of Indian internet companies went from 2 to over 25. And the indexes we have became, India became a bigger and bigger part. The broad EMQQ index is still largely China, 45%, but India has gone from essentially nothing to almost a quarter. If you leave out China, India is the biggest part now. And we also have both on the New York Stock Exchange and in Europe an India version, INQQ. Now, let me tell you why India is, I think, the perfect emerging market. Now, when I made this slide originally, I had a question mark at the end of it. But I realized after a few days that it's really not a question at all. And let me tell you why I'm so confident in this, that India is perfect, at least on paper, and it's pretty straightforward. If we go back to the beginning of the presentation, why are we investing in emerging markets? And we map India over to each of these factors. India is as good as you're ever going to get, and it can't happen again. Not only is there a lot of people in India, it's the biggest country on the planet population-wise ever. Today it set a record as the largest population ever. Tomorrow it'll set a record. And every day and every year for a long time, on that day, India will be the biggest country the world's ever had. China's demographics aren't as bad as Japan's, but certainly not what they used to be. And if you leave out China, India is bigger than all of the other emerging markets combined. So when investors tell me they're excited and focused on places like Vietnam or Mexico, those are fine and great parts of the emerging market universe. We invest in them as well, but it's hard to get excited about a country with 100 million people when you've got a country with 15 times that and a lot of other great things going on in its favor, which I will also cover. So it's the biggest country. It's the youngest population, the average age, 28 and a half. It has the fastest growing GDP in the world, and that's driving consumption, just like we saw in China over the last 20 years. And if you take all of these factors, the size, the youth, the growth, it would appear that India is going to pass China and be an even bigger consumer in the not too distant future. And in 25 years, it'll be significantly larger in terms of consumption than China is. So I don't think it's debatable. On paper, India isn't just perfect, it can't happen again at the scale. So, okay, then where was India before? Why is India now arriving? I think that the simplest answer is because of Modi. Now, when India gained its independence from the British about 80 years ago, they inherited a lot of socialism and a lot of bureaucracy. And they certainly made reforms along the way, but not nearly what they needed to. And when Modi came in 11 years ago, he came in and started to run the company or the country like a business. And he was all about cutting red tape and a lot of the inefficiencies that were part of the way India operated its economy. And so he did a number of significant reforms and made doing business a lot easier. But he also doubled the country's infrastructure, which was holding them back in a big way. When I got involved 20 years ago, China and India were basically neck and neck. But every year, India pulled ahead as they were building the world's greatest infrastructure. China pulled ahead. India, meanwhile, the power didn't even work, and so it's hard to, really develop an economy or attract manufacturing when the summertime strain on the power grid leads to brownouts. And so Modi, in the first 10 years, doubled everything, making their own high-speed trains, connecting the major cities with high-speed rail lines, tripling the number of airports, and finally the deep water ports that are going to be needed for them to continue to get manufacturing jobs as they continue to look like they are going to do as this trade situation develops. So Modi has in many ways laid the foundation for this country in terms of the physical infrastructure. Now, let me now tell you why I believe that this India opportunity is really a very, very special opportunity. Now, I started with a bold statement that India was perfect, and I think I made a pretty good case that it is, at least on paper. But India's also got two other elements that really put it head and shoulders above anything you're ever going to find in the world of emerging markets. The first one is the human capital that India has. India has a technology sector that is older than me. Tata Computer Systems was founded in 1968. So you have an ecosystem of publicly traded technology companies, billionaire founders, millions of employees over the decades, and an ecosystem that is unmatched. You're not going to find it in a country like Vietnam or Mexico. You also have some of the world's greatest colleges, the 23 Indian Institutes of Technology and the 21 Indian Institutes of Management. And these are world-class institutions. Some of them are harder to get into than our Ivy League schools. And the talent that comes out of these schools is unmatched. There are 25 companies in the S&P 500 that have an Indian CEO. 25 S&P 500 companies with Indian CEOs, including Google and Microsoft, both of whose founders went to school here before getting work visas to come and work in Silicon Valley. So again, you've got a big population, you've got all those things you want, but you still need people to execute. And so not only is it the world's biggest democracy, it has arguably some of the best human talent in the world. And also importantly, while historically there was a brain drain where the best and brightest would try to come to Silicon Valley, that has changed in a massive way since 2016. Now you'll see I have an arrow there at the 2016 mark. India's big bang, as I'll show you, was 2016. There were a series of things that happened in that year that have led to a number of charts that look like this. This is showing you entrepreneurism since 2016. Think about that. You've gone from less than 500 startups to 150,000 startups, 400x growth. And all of the India story is spreading from the top tier schools and the number one cities to the second and third tier schools and the second and third tier cities. You have entrepreneurs coming from all over the country. A lot of that is thanks to India's own Shark Tank, which is now in season 4. And I actually spent some time with Anupam Mittal, one of the sharks, who is kind of the OG of the tech space in India. He started the leading matrimony site, Shaadi.com, in 1997 when he was in college in Boston. And now his site has led to 8 million marriages, and he very much confirmed to me that his best deals he's seeing now are from tier 3, 4, 5 cities, and not from the IIT. So all of these parts of the India story are spreading. Now, let me tell you the second thing that puts India above anything else in the world. Now, this part is unique in a different way. There's no country in the world, no developed country or emerging country that has what India has got, which they call the India stack. And I speak to thousands of investors all over the world every year, and I am convinced that this is not only valuable, but the world's the global investors of the world, they don't understand what India has in this India stack. So let me explain it to you. The India stack is India's digital public infrastructure. What is digital public infrastructure? There are things that are digital, they're free, and they're like the pipes and the roads and bridges for the information age. We don't see them like a gas pipeline, but we use them every day. The best examples of digital public infrastructure, the internet and GPS. I didn't launch a satellite. Uber didn't launch a satellite either, but if I want to get a car and go to the airport, I can get out my pocket-sized supercomputer and push a button, and using GPS, a car will find me and take me where I need to go, and Uber will make a couple bucks. And so we're using digital public infrastructure. We just don't think of it as digital public infrastructure. India has the internet and it has GPS, but it's also got its own. And the reason it's called the stack is if you make a picture of this digital public infrastructure, it looks like a stack of pancakes. So let me tell you about the two bottom layers of the stack. There's a lot more to this than I'm going to be able to cover, but I'm going to hopefully give you a pretty good idea of why I think this is so powerful. So let's start at the bottom. Okay, this first program here is called Aadhaar, and that is the Hindi word for foundation. So the foundation of the stack is called foundation. And here's how this came together. This man is the hero of this India stack. His name is Nandan Nilekani. He is one of the co-founders of Infosys. He is also currently the chairman of the board of Infosys, India's largest technology company. And what happened was in 2009, the government asked him to be in charge of a program, a nonprofit partnership between the government and the private sector, to launch this first layer Aadhaar, again, which means foundation. And the idea was that they were going to give everybody in the country a national identity card, a physical card with their name, their information, and their picture, and give them their own 12-digit identification number. He agreed to be in charge of the program, but he insisted that if they do it, they use a lot of technology. And not only would they give everyone a card, but they would scan their eyes and their thumbs so that they could be instantly verified as who they were. Now, this was very important because one of India's challenges in developing was nobody had any identification. Only 20% of the population had an official identification of any type. And so it was hard for the country to really, formalize. So they launched this program in 2010. And in 2014, they added another layer to this, and a know your customer layer. And they opened a system with the banks and said, if you're in this database, if you've registered for your ID card, you can walk into a bank and open a bank account in a minute and a half with just your thumb and looking in a camera. I didn't realize this had got so far until 2020. The entire country is now in this biometric database, has a physical card. 830 million people, 830 million people that were living a life outside of the financial system. They were not included. They were all paper-based. 830 million of them walked into a bank and opened a bank account. Think about that. So this is part of the power of this stack. They've used it to go from an informal to formal and from a paper to digital financial system. Now, private companies can use the stack as well, just as Uber uses GPS and Google uses the internet. Reliance Jio, when they launched the first 4G network in 2016, the Big Bang, it used to take 3 hours to get a mobile phone or 3 days to get a new phone. Well, not anymore. When they launched in 2016, they used the same know your customer functionality. The whole stack has got open APIs, and they signed up 1 million people a day for the first 3 months, and now 500 million people on Jio, which is 5G, ready for 6G. And India's got the lowest price data in the world. And if you look to the right, Indians use more data than any other smartphone users on the planet. So now the next layer of the stack, a payments layer launched in 2016, the Big Bang. When they launched this, I didn't understand all the hype. I thought QR code-based payments isn't really cutting edge. Everything in China had a QR code on it by then, but I didn't pay attention to the details. This isn't Apple Pay. This is instant, free transfer of money from one account to another. You push the button, it's instantly in my account, and it's exactly as much as it was when it started. So this is the best picture of India's digitization. This is showing you the number of payments monthly on the UPI. The slope of this, it remains 55%. Only about a quarter of the country is using this. This represents 1/2 of the entire planet's instant payments. And behind this, the entire Indian economy since 2016 went from paper to digital. You had in 2016, 95% of all of the GDP was paper-based currency, nobody paying their taxes, very informal. Now it's 86% digital, and people are paying their taxes. The tax collections are growing faster than the economy. So India is kind of like China was 20 years ago. But India is coming into this phase where now smartphones exist. And not only do they exist now, but you can get a brand new entry-level smartphone for as little as $12. And you put that on top of this genius operating system, this India stack, which I've barely scratched the surface on. And this is the reason I am pounding the table on the India story. It's not just the size and the youth, it's the human capital, and it's this incredible digital structure that has really created an opportunity that is, as my partner Burton would say, it has no antecedent. Now, this guy is one of my heroes. If you want to learn more about him, there's a great 12-minute interview with Morgan Stanley where he talks about the stack, how it started, where it's going. I think if you're, a global investor considering India, you should definitely study this man Nandan and what he's done with this India stack. Okay, now let's talk about the digital part of the story, which is what we're focused on here. The main thing that I want to get across in the next few slides before we get to the end is how early this is in India. I'm going to show you a number of charts that are going to be kind of like this one. This is a chart from Temasek and Google and Bain, and it starts in 2022. It ends in 2030. So we're the first half of the slide, but getting close to the midpoint. And what the black line is showing you is that India's GDP will almost double in that 8-year period. But the gold line is showing you the Indian internet economy will grow 400% in that period. And so, and in all of the different things I'm going to show you, even if these things triple in terms of like the penetration rate, they'll still be early. So let's review a couple of specific examples. One of the companies that we feature a lot and talk about is historically it's been called Zomato, but it has recently changed its name to Eternal. I believe the ticker is still Zomato, but let me tell you what this company is. Eternal, formerly Zomato, was founded by these two guys. They went to school together at the best college in India, IIT Delhi. They worked at Bain, and then they got funded by Sequoia. And you can call it the DoorDash of India, Zomato or the Deliveroo of India. Now, look how early this is. This is showing you per capita spending on food delivery and grocery delivery. So these are the founders. Again, the story all usually the same. Smart kids, best colleges, work for a U.S. company or global company, get funded by Sequoia or somebody else. And again, look how early this is. So what I'm trying to show you here is the per capita spending on this food and groceries, it could double or triple or quadruple, and it'll still have 10 or 15 years of growth ahead of it. And let's talk about the business. So DoorDash, Deliveroo, whatever you want to call it. This is the food delivery leader with their original brand, Zomato. They have about 58% of the market. But all of the parts of the food and restaurant sector in India are very informal right now. And so their food delivery business is very fast growing and very profitable, but they have other businesses now as well. The one that was the fastest growing was restaurant supplies. Excuse me. Their company Hyperpure is one of the leaders in the restaurant supply business, which is incredibly fragmented. So you've got not just food delivery, but restaurant supplies. And now they have a third business, and it's going to be bigger than the other two. It's called Quick Commerce, and the brand is Blinkit. So Zomato's got three businesses: Zomato food delivery, Hyperpure restaurant supplies, and now the quick commerce leader, Blinkit. Now, how does this quick commerce work? Quick commerce is 10-minute delivery of anything. You're going to download the app, put in your address, and you're going to see on the app thousands of items that you can push the button for, and you'll get them in 10 minutes. How does this work? Well, you need large populations. You need a dense city. You need low-cost labor, and you need two-wheeled vehicles, motorcycles, mopeds, scooters, bicycles, etc. And when you push the button, rather than have a warehouse every 10 miles like Amazon might, you're going to have a miniature warehouse, a dark store every half mile or 3/4 of a mile. And so when you push the button and say you want some bananas and a soda and some cleaning supplies, those items are going to be in a bag in 1.5 minutes, and a person on a scooter is going to grab them. And because you're less than a mile away, you're going to get them. And this is absolutely exploding in India. I can't overstate this. The expectation is in the next 5 years, it will grow 650%. And why is this happening? India has the most fragmented retail market in the world. There are 13 million stores like this, a mom and pop store or a Kirana store, and it may have 150 or 200 items, and they're every block or so. And right now, they represent almost all of consumer spending. So you've got $550 billion a year in revenue that is getting disrupted in an incredible rate. And now this store has 5,000 items, though. This store only has 200. So it's not just taking share from these 13 million mom and pop stores. It's also going in other directions and theoretically taking share from Amazon.com India, as well as Flipkart, which remains private. So my point here is, again, fast growth right now, fast growth for a number of years, but decades of growth. So if you're a long-term miracle of compounding person, I think the opportunity here is quite immense. Now, another example, Make My Trip. This is the company that we owned on day one. The only company that trades in the United States. It's an online travel app, and you can see the founder went to the best business school in India. IIM Ahmedabad, worked for GE, funded by Tiger. This company is 25 years old right now. They're running a lot of billboards celebrating their old schoolness and comparisons like cassette tapes and old school cameras and so forth. And again, only 3% of Indians fly on airplanes right now. So you again can have 200, 300% growth in these verticals, and it will still be early. Finally, these two guys have the leading online insurance marketplace, Policy Bazaar. They went to the schools I've mentioned before. They worked for GE and Bain, funded by Tiger and SoftBank. And now it's not just insurance. They're also getting into credit. They have one of the leading credit sites. And here again, you'll see blistering growth in these near-term years. So everywhere you look, I think there are green fields. Finally, the Sephora of India. This woman was one of the leading investment bankers in India and decided to leave and start an online beauty business, Nykaa. She's now one of two self-made women billionaires in India. And again, we look at the greenfields nature of this. If India gets not even halfway to Thailand's per capita spending on beauty products, it will have had several 100% of growth. So greenfields in all directions. So in summary, there are risks. There are lots of risks in the world, and certainly in emerging markets, which we've seen repeatedly. I think that India has a uniquely large risk in terms of the leadership. Modi has very much been the embodiment of this rise that India has experienced in the last 11 years. He's in good health by all accounts. He, I think, will intend to serve his country as long as he can. But you never know. He will be reaching the age of 75, and the not totally formal retirement age, but he remains an important leader in the country. You've always had and will always have different religious and ethnic tensions around the country, especially around the edges. We certainly have seen that in the real world in the last couple of weeks with the armed conflicts and escalation between India and Pakistan. You need a lot of jobs. They got great demographics, but you need work for the youth, and they know that. Corporate governance is a risk in emerging markets. The Adani Group has been under a lot of suspicion. We don't invest in that company, and that's in many ways an example of why we think the internet companies are the way to go, because it doesn't guarantee better corporate governance. But if Sequoia sets up the LLC that started the company to start with, or the C Corp, I think it's a pretty good head start. Environmental risks are acute in India, certainly heat and pollution along the Ganges, and currency risk certainly as well, though that's gone the other direction recently. But the case for India is quite strong. It's the world's largest democracy. As I went through in detail, it's about as good as you're, not about, it is as good as you're ever going to get on paper in terms of the size, the youth, the growth, and the consumption trend. You have, as I mentioned, human capital that is certainly second to no other emerging market. You have a relatively strong geopolitical position, and you also have India as a pretty early mover in working out a deal regarding the tariff situation. So, and finally, valuations seem reasonable for all of this sector. The broad emerging markets internet sector has a peg less than one. China internet companies still sell largely at single-digit multiples, but I suspect that may continue to change. But the India multiples a little higher, but the growth rate really quite strong. So the internet sector, I think, is the way you do this in emerging markets. You've got almost no exposure to the tariff and trade issues. You've got the fastest growing part of emerging markets. You've got entrepreneurial companies backed by Sequoia versus, the Agricultural Bank of China or Petrobras. And the valuations, as I mentioned, seem reasonable. So that's the end of my presentation. I hope it was of interest and value. I hope that all of you are able to see my slides, and I'm happy to answer any questions here as we wrap up. So I don't know if you want to pop on to answer your questions if you have any, or put them in the chat, but I'll be here until we answer those questions, and then we can wrap it up. But for those of you on, thank you very much. I'd love to connect with you on LinkedIn. Please reach out, and if you want to have a follow-on discussion about any of this, by all means, you have my contact information here. As the host mentioned, there is a replay, and the slides will also be available. And I also should mention, I do get to Europe a few times a year. Our strategies are listed on multiple exchange there, and we do a roadshow 2 or 3 times a year. So thank you again. I don't see any questions right now. I'll wait another minute and see if any pop up. If the case is so clear, why do I think more investments haven't gone into India? Well, I guess I'll say a few things about that. I mean, there hasn't been a lot of money going to emerging markets in general for a number of reasons. And I'm talking about, say, the last 10 years, not including the last 5 months. The S&P 500, the FANG stocks have been the only game in town basically for a lot of investors. So just in general, I think EM flows have been negligible. I think people don't really understand India or China, frankly. But I think that from my experience, 95% of the investors I've talked to, they've never been to China or India, and so that all they know are the things that they've picked up in their lives through school or television or other media. And the coverage of India has frankly been never really that positive. I mean, when I ask people if they what do they know about India, or what visuals come to their minds, they think of it as very much still a very third world country, and it is. It's part of the opportunity is you have 750 million people, half the population, that really is more like a frontier market in terms of the per capita incomes. But people, I don't think, quite appreciate how far this country has come and how digital and formalized the economy has become in the last 8 years since 2016. I got to be honest. I mean, I focused on emerging markets, and we didn't have a lot of Indian internet stocks, so I didn't go too deep into the India story. But I have to be honest, in 2020, when I knew that we had a bunch of IPOs and I rolled up my sleeves to figure out this digital public infrastructure, I was somewhat surprised by how advanced they had become in that digital manner. So those are some of my efforts to answer your questions. To be honest, I'm a little surprised there isn't more money going in, but that doesn't change my opinion that it will go in. That if they keep doing what they're doing, investors will continue investors will increase their exposure, I think, to the country significantly. And I think there's also, as has been made by UBS and Goldman Sachs and some others, there's a decent case that India, of all the emerging markets, may deserve its own standalone allocation. So that if you follow up or have questions, I can send those recent research pieces as well.
Perfect. Thank you. Just one more follow-up question. I'm
Yes, sir.
currently based in South Africa at the moment, and something I'm very worried about when it comes to any kind of emerging market is corruption. What's your opinion there when it comes to India? Because I suppose you go there often, you meet all these senior people. Do you feel it's a robust uh, place where corruption is very low, or do you think that's something to worry about? Because in a lot of emerging markets, it's unfortunately still a very big problem that makes it very difficult to invest.
No, no, no. I absolutely. So, um, uh, India historically has had a ton of corruption. I mean, that was part of the it remains part of the problem. If you wanted to start a business, you had to get 25 different approvals and licenses, and every one of them included some kind of kickback. If you were a truck driver and you had to go through 3 states to deliver your cargo, every time you crossed a state border, you'd have to pull into a side yard and wait for the tax collector to come with a paper pad and a pen and go through your truck and make a tax receipt on paper. And every one of those stops involved some kind of a bribe to speed up the process. And so this is part of the great digitization story because uh, it's the digitization and formalization of a lot of this that has removed the ability for a lot of this corruption. A lot of Indians receive distributions. There's still a lot of socialism in the country, and there are a lot of government payments to people for different things. And the amount of leakage in those programs was, the tens and tens of billions of dollars a year. All of that's digital now, and people are getting it digitally. So and now the all of the trucks now have a digital inventory, so they don't even stop at the border. So not only are you um, accelerating the economy with the technology, but you're also by formalizing it, you're getting rid of a lot of the corruption. Another example, when I was with Nandan and his team, well, actually, before I went to see Nandan Nilekani, the man who's building this stack, he asked me if I wanted to see the stack in action. And I said, of course I do. And so he directed me to meet some of his people over at the local post office so I could see how the stack was, happening day to day. I certainly got to see the enrollment station, which, everyone's in the database now. So, they still have a few people come in every week just to register, but for the most part, that's all done. But one of the when I spent we spent a couple hours there, and I got to see different use cases, if you will. And there was a man that came in, and he was a retired soldier, and but every year he's got to come, and there's tens, hundreds of thousands of places you can do this, but go to the post office to prove he's still alive. And so
Yep.
he came in and they scanned his thumb, and he stood in front of the phone and verified his identity. So he continued to get his distributions from the government. So there's still corruption as you said, all over emerging markets. That's part of the problem with the state-owned enterprises, right? That's
Yep.
where
Yep.
corruption's rampant. I mean, I didn't go that deep into Petrobras, but people don't realize that you know a third of the Congress people and two of the last presidents were all involved with a massive kickback scheme where 5% of every contract, every contract had a 5% kickback built into it for a decade. So it is a problem. And ultimately everything's relative, right? And so um, uh, do you if you own coal, the Indian coal state-owned coal company, right, which is public. Uh, do you want to own that, or do you want to own, a startup that Sequoia wrote the first check to? So it's one of the reasons I think in emerging markets, the internet companies offer so many advantages, and the lack of exposure to the corruption, perhaps one of them. I hope that answered your question.